You think the rich make more money in crypto because they're smarter than you. They're not. They win because they understand something that you don't. Crypto isn't about picking coins and altcoins. It's about strategy and structure. The wealthy investors don't continue to chase prices and headlines. They don't guess. They start with a plan. And we see this all the time. They know exactly what they own, why they own it. They know when they're getting in, the positions, and they're acting off logic, not emotions. Most investors just skip this part and they just go straight into it and they pay for it later by shooting from the hip. So what Bergs and I have decided is today we're going to be breaking down what the wealthy, what the rich actually know about investing in crypto that you don't. And we're going to go through our simple 7-step process designed to help remove emotion, build a plan, build a structure so you stop making mistakes, emotional mistakes in a volatile market so you can be disciplined through all the cycles. So we're not about predicting markets, it's about preparing. And that's what we're going to walk through today because it's something that we all use internally. Collective Shift, I've used this process for the last 8 years. All of our clients go through it. And Bergs, we just want to go rip it because we see too many people shooting from the hip and then go, oh shit, I don't know what I'm doing.
Exactly. People need this. Not only do we have this structure, but we're going to go through all the lessons that people have learned, all the things that come up time and time again that you're probably experiencing yourself in each of these steps, how we've solved them, what to look out for to get your portfolio right.
Ready to rumble. And by the way, folks, so the 7 steps, I think the most important one is the sell strategy. This is what 95% of people struggle with in crypto. That's going to be step number 7. Make sure you stay to the end because we're going to go through and help you build that sell strategy. We're going to start with...
Absolutely. And like just the other episode we released the other week was how we lost millions in crypto. And the majority of that is because we did not have a sell strategy. So stick around until the end because that is the most important part. Each step builds on the previous one.
Now, we know listeners, Ben and Bergs, you guys know what you're doing. You're not, you're not listening to this podcast because, you're a bad investor. You're probably making money in other markets, whether it be property, stock portfolio, whatever it is. What we're trying to build and share with you is that we want you to start to think about crypto as a investment and a wealth creation machine, not a gambling, speculative, throw at the stumps. And when you start to think about crypto and digital assets as a wealth creation machine, that's where the strategy comes in. And ultimately, the way I think about crypto and the way I think about why I'm in this space is to accumulate Bitcoin. All right. Bitcoin is the best performing asset of the last decade, continuously, continues to perform and compound at 30 to 40% per year over the last few years. Yes, there's volatility, but it is built for high debt, high liquidity environments. It's an offset against inflation, and it's just the best asset on the planet, in my opinion. And I want to buy as much as I can of it. Now, why would you have a strategy and why would you not just buy and hold Bitcoin? Well, of course you could just buy and hold Bitcoin, but the way we do it is that we try and utilize, and we've got, our sort of, audited performance over the last 3 years is that for me, I've been able to outperform the market for most of the last 7 or 8 years because we're adding altcoins at select times of the market, the right altcoins at the right time to get in, get out, and buy more Bitcoin with those altcoins. And that is the way we do it. And we time buys and sells because that is a faster way to accumulate more Bitcoin. So yes, you could just go and buy and hold Bitcoin and let it ride. But for us, we want to try and accelerate that growth by utilizing the strategy we're going to share with everyone today.
Exactly right. And even if you just buy and hold Bitcoin, you still need to do this strategy because there are so many steps that apply and things that you need to think through. It seems simple buying and holding Bitcoin, but there are so many things that'll pop up along the way that you will need to deal with over the years that we're going to go through.
Yeah. Now, number 1, let's get into it. So what does your portfolio actually look like right now? I know this is a basic one. We've got a dashboard on our platform where people plug in their assets. You can use, whether you're already on a crypto exchange, you can use something like Crypto Tax Calculator just to understand where your assets are. This is the most important part because so many people don't even know where their assets are. And I will use an example of this. When I did my tax, I'm not sure if you remember this, Berg, 3 or 4 years ago, and I went to my tax agent and he's like, Ben, you've got like 18 Ethereum on this address. Do you know where it is? I'm like, nah, mate, like you're joking. Like I don't have 18 Ethereum there. He's like, no, you do. Check it out. Turns out that on my ledger, I hadn't updated my ledger properly and I found like 18 or 19 Ethereum just sitting on my ledger that I'd totally forgotten about. And it was a reminder for me that like crypto happens so fast. You end up with a million wallets, a million exchanges, you got shit everywhere. You need to understand what you've got to analyze your portfolio to build a structure to begin with. If you don't know what that even looks like, you're starting out without actually knowing, what you've got.
Imagine finding 18 ETH in your sock drawer. And for those that don't interact a lot with crypto or haven't started investing yet, what this looks like is you have a little software wallet or hardware wallet on your computer. You're buying things, you're doing transactions, you're interacting with contracts. You're not going to remember what you did 6 months ago. And if you've got good digital hygiene, you're using new addresses each time. So you've got hundreds and hundreds of addresses. You're not sure where things are. And this kind of process is amazing for discovering those. And Ben, I think I'd really like you to talk through. I hope you know who I'm talking about. There was a professional services person. You went to his boardroom.
Yes.
He had his lawyer there as well.
Yep.
Yeah, you know the person I'm talking about?
Yep.
Talk about that experience and getting everything together because that was eye-opening.
Yeah. So we had one of our platinum clients. I went over and did a one-on-one strategy with him in person in his boardroom. He's quite a high-end, business owner. And we went in and he's like, Ben, I just have stuff everywhere. Like where on earth is everything? And, he had stuff on ledgers. He's had some stuff on MetaMask. He had stuff on different exchanges. And just that cognitive load of not even knowing where the hell anything was making it impossible to make any decisions. So we sat down. What we did is we used Crypto Tax Calculator to then basically build in, all the wallets that he had through a read-only API. So essentially you could see all of their wallets on screen. And then we were able to see a pie chart and build out a strategy because he didn't even know what he had. Not only did he not know what he had, he didn't know how much exposure he had to different sectors. So as an example, he had a lot of exposure to one of the layer one blockchains. So yes, he had like 6 different coins as an example, but 5 of them were on Solana as an example. So like when you've got 5 out of your 6 projects on Solana, you don't have pure diversification. You've actually got a lot of exposure to one blockchain. It's like putting all your money into Apple shares or, apps on the app store and not investing elsewhere. It's like if Solana goes down, well, all these projects are going to go down. So without knowing that initially, we can't start off with a strategy.
Exactly right. And this is what the Collective Shift dashboard does, where after you've got all that stuff, it takes 5 minutes to enter your coins and it'll give you a pie chart, but also the different sectors you're in. I had this because I invest in ETFs as well. And 5 out of the 6 ETFs I had, the majority of stuff they were holding was like Apple, Nvidia, another one. Here I am thinking I'm diversified.
Yeah.
But when you go through to the actual holdings of each of those ETFs, it's the same crap for 90% of it. I'm like, I'm not diversified at all.
Yep.
And it's the same thing here.
Yeah, totally. And there's another example that I want to share. His name was, I think it was, Chris. Chris came through. He had 80 different coins before coming on with Collective Shift. And he didn't even realize until he added all the coins up on the screen, you could see like all these different coins. He just accumulated so much, as so many people have done that before, and you don't even realize what you bought. So step number 1, get that portfolio right, and then you can start to cut down and build a strategy.
That's it. You need to know the landscape before you start to make strategic decisions.
Yep.
Where are you at? What do you have? Great. Now let's move forward.
Spot on. Now, the next step is, what are you trying to get out of crypto? This is your goals, right? And a lot of people don't have goals. An example of this was I was speaking with, he wasn't a member, it was just a guy at an event. He came up to me and he had $1.2 million in Solana, everything in Solana. And this was probably, Solana was $180, $200, maybe $220 US dollars. Down quite a lot since then. And, the conversation I'm having with him was like, what's your goal? Like when are you going to get out? What's your strategy? What's your exit strategy? He's like, oh, nah, I don't really have one. I'm just going to continue riding it. And I'm like, but, crypto runs in cycles. Like, what do you like? Sure. Have you thought about what you want to do with the money? He's like, oh, nah, don't really care. It's just going to keep going up. And I find this a lot in people that round trip their crypto or they don't exit, is that they don't know why they would sell it or what they want to do with the money. So they don't have a reason to sell. And this was the same with me when I was able to make profits back in 2021. The reason I was able to take profits out back in 21 in the metaverse era was because I wanted to build Collective Shift, my business, and I needed money to do that. If I didn't have a reason to sell, I wouldn't have sold. Because crypto is very emotional. It's very euphoric. You just keep thinking it's going to go up forever. It's not the reality. You need a goal.
Exactly. And if your goal is like, I want 5% a year, well, you don't need to take the risk of crypto. Like you can invest in other things, right? And people, this is the common question we get. I've got $10,000 I want to invest. What do I invest in? It's like, well, what are your goals? What do you want to achieve? What's your time horizon? What's your risk tolerance? All the things we'll go through in a minute. And an analogy for this is like, hey, Bergs, here's 400 grand, go build me a house. And it's like, well, are you by yourself? Do you have a family? Are you going to have one? Do you like a big backyard? Yeah. Do you want a pool? Do you want single story, double story? Like you need to know the person's preferences. Like you need to know your own preferences and the way you like to invest as well,
Yep.
which will be coming up, to actually understand, right, these are the things I want to get out. So when you understand what you have
Mm-hmm.
and what you want to achieve,
Mm-hmm.
then you can move on to the next steps. But if you
Mm-hmm.
don't even have that, you're trying to maximize every dollar, you won't know when you've achieved your goal. You don't know when to stop. You don't know if your goals are unrealistic.
100%. And for me right now, my goal, and it has been all cycle, is to buy my parents a house. I'm in the process of doing that. And the reason I was able to do that, the market's been sideways, for 12 months, right? It's been quite hard to take any wins. But middle of the year, we had a big run up, and I took profits on syrup up 560%, which we shared in our group. And the reason I took those profits was not because I thought it was the absolute top of the market, but because it allowed me to start that process of buying my parents a house, which was my goal. So again, if I think back at every point in my crypto investing journey where I've taken profits out and exited, it's never been at the top. It's never been because I've timed the market perfectly. It's because I've wanted to action something in my life with that money. And that's the real reason you need a goal. Otherwise, you don't have a reason to sell.
Yeah, and the clearer your goals are, the more likely you are to sell and achieve it. If it's like, I want to drop down from working 5 days a week to 3 days per week, and I want to do it for the next 5 years, and it costs $100,000 a year to do that, it's $500K. When you hit that, you sell, you've achieved your goal, your life will change for the next 5 years.
Oh, so good. So good. Right. Next one. What is your time horizon? Now, I think time horizon is something that gets overlooked, and maybe it's become less relevant recently in a sense that the relevancy on time horizon is the fact that most investors that I see get this wrong is where they have an artificial time that they need money out of the market. I need to double my portfolio by June next year. It's like, well, great, Gary, or John or Bob or whoever it is, but you don't have a horse in this race. You cannot change the outcome of a market. This is not a business. This is not a job. You don't put in hours and get back money. So the time horizon piece is around understanding that your time horizon will dictate your risk and your tolerance. But what I find is people that have shorter time horizons take more risk. And what ends up happening is that it doesn't go their way and the portfolio then underperforms and now they're even more worse off.
And let's say my goal is to get to $1 million. If I want to do that in 1 year, my risk is going to be insane. And what comes with risk? A high rate of failure. If I want to get to $1 million in 10 years, it's a very different path and it's more measured.
Yes.
And it's investing is not a thing where you put more time and effort into it and you research more and you do more, that you get a better outcome. You hit a ceiling at some point in time, you start executing against it. It's not like you're sprinting and you're like, I'll sprint fast and I got to get to this light pole in 15 seconds or I'll die.
Yeah.
That is not what investing is. It's endurance and durability and
Yes.
staying in the game over time. And just on this time horizon, let's use another analogy, another scenario about retirement. So if you're retiring at 65 and you're 62, and you want to retire at 65, you can't change the markets.
Yes.
You cannot change market cycles. What you can change is your portfolio allocation from being high risk in high risk stocks, whatever you have in your portfolio, to lower risk, maybe some real estate, maybe cash, maybe bonds, so that 65-year age is guaranteed. Yes, you sacrifice a few percent of gains, but you achieve your goals. A lot of people didn't do this during the GFC, during COVID times as well, and they could not retire because their portfolios went down 30%. They had to work for another 2, 3, 4 years for that balance to build back up and for the market to correct. And you don't want to be in that position. You want to be able to retire and not sacrifice 4 years of your life.
Yeah, that's perfect, Berg. And in terms of like my personal experience, over the last 5 years, my verified returns, out of the 5 years, 3 of those years I was in green, 90%, 96%, 3,000%. That was back in 2021. But the other 2 years, I was down 12 and 16%. So you're going to have years where it's red in crypto, sometimes even more. I was able to manage the downside risk pretty well. Like the market took a huge crash in 2022. But like the point being is that you need to be able to manage sideways years. And if you have a year where you really need the money out and now you need to sell when the market's down, well, you're going to shoot yourself in the foot twice.
Yep. And we say stock market averages 10% per year. What that looks like, 1 year plus 30%, next year minus 8%.
Yeah.
And you'll have roughly 2 down years every 7 years.
Yeah. Perfect. Now, time horizon ticked off. Next one is, we want to look at how our portfolio is structured. And this is one where, again, thinking about like, do you have an all Bitcoin portfolio? Do you have Bitcoin and altcoins? Do you have stable coins? How do you think about it? And this is what changes and is optimized throughout the year when managing a crypto portfolio. Unless you're purely Bitcoin only and don't want to touch it, that's fine. But if you want to manage your portfolio, like structure is really important when managing your risk. A lot of people, again, come into our group, our platform, and they start to go heavy on they go heavy on altcoins, and then they come to us and go, hey, my portfolio's down. Why? It's because, well, you haven't managed your risk and your portfolio structure is terrible. I've spoken to so many clients, even just one the other day, that he's actually really optimized his portfolio now, similar to mine, where, in the last few months, the market's been pretty rough. He's positioned his portfolio more defensive. He's got more Bitcoin. He's added stable coins, and now he's ready to deploy if the market goes down, versus someone that has gone way more risk on and has been, hammered in the last few months.
Yep. And this is the benefit of coming to someone like Collective Shift. Like, I've seen this over the last few weeks. People are thanking us in the Platinum chat, because if they kept all of their altcoins, they would be down bad. Altcoins are bleeding. And we've been telling them, we're like, hey, this is what's happening in the market. De-risk over here, increase over there. These are the things you should be considering. And the people that have done it and actioned it are so much better off, because we've got those analysts looking at the market.
There's a couple of those good messages come to the WhatsApp. One was from one of their clients the other day. Because of Collective Shift, I have a dominant Bitcoin portfolio with some select altcoins. I'd be way down without this service. Very happy with the Platinum experience. Really good. So like those sorts of things, the structure is really important, and it's different for everyone. Like, it's a personalized sort of thing that we go through and understand where you're at to try and, build out the portfolio. And it may be because you've already got an existing portfolio or you're wanting to get into crypto. It's different for different people.
And we find when people first come to us, we had a all-time high winner the other week where over 100 altcoins, and people take on way too much risk. And if you think of your barbell strategy, where the classic one is equities and bonds, essentially. And if you think of Bitcoin as like bonds and the rest is equities, you can have, because people take on a lot of risk. I need to go into these really far out on the risk curve, which is the riskiest thing on the planet, small cap altcoins that they don't understand. And you're putting the majority of your investable assets in there. You don't need to take on that much risk generally for the goals that you have.
Yeah.
And you can de-risk that. You can sleep better at night, and you only have to manage a few select coins. That is the way to go.
Yeah, simple
for the
is
majority
better.
of people. And and you don't know until you come through and do a process like this with us.
Yeah. And that's actually, a good probably point to lead into on the buy strategy. I'm going to just skip tax and structure. I'll come back to that in a second. So the next step is, what's your buy strategy? Because when we think about buy strategy, this is like, well, what altcoins do you buy, when, and how? Now, one of the biggest advantages that we've had, and where I've made most of my money in altcoins, is getting exposure to altcoins pretty much before the mainstream. That's really the only way you really get big growth on your altcoin return. So if I think about Maple, like Syrup or Hyperliquid, both of these projects, this year as an example, were not available on any major exchanges. You couldn't buy them on Coinbase. You couldn't buy them on CoinSpot. You couldn't buy them on SwiftX. You had to go through, Uniswap, decentralized exchanges. Some people, call them primary markets. Some people call them native markets. Essentially, what that means is getting access to tokens directly through the blockchain. So using decentralized exchanges, because that's where you can basically buy any token, anytime, anywhere before it gets listed on the public exchanges. Now, this is so important because if we look, this was back in November, we're looking at the market performance of this year, and Bitcoin at that point was down 2% year to date. Hyperliquid up 85%, Syrup up 75%, and altcoins were down on average outside of the top 10, down 35 to 38%. So it's close to 100% outperformance on these two altcoins because they were available to us through the entry of our analysts finding them before they get listed on the major exchanges. And then basically by the time they get to the major exchanges, that's when we're like selling into the retail.
Yeah.
So that's the big component of getting in early.
And when you talk about that, I think about property and who are the people that make the most money? Ones that get in early and ones that add value. So I made the most money in my estate because I took the most risk and I bought at stage 1. We're now up to stage 15.
Yeah.
My housing price has more than doubled.
Yeah.
Right? Because I got in early and I took the risk.
Yeah.
Now we've got beautiful parks, we've got a school, we've got all this stuff. None of that existed. I had to drive. We didn't even have a road. I had to drive on rubble through these trees and almost destroy my car because for the first 6 months, we didn't have a road. So when you get in early and you take that and you know what you're looking for, I knew what I was looking for and what I wanted, you end up making the most gains. And then the second one is people that add the most value. So if you just buy a house, you buy and hold, you're at the mercy of the market. But if you can, the equivalent of this in crypto is, accumulating over time, interacting with contracts, using decentralized exchanges. If you can see a property and you can renovate it, you can subdivide it, you can add another story on top. If you can do those things and you look at it with that lens, you will also make the most money.
Totally.
Because you're doing the things that other people can't.
Yes. It's the risk and reward.
Yep. Or they'll choose the wrong property to do it to.
Yeah.
They'll want to subdivide or add another story or renovate a property. And at the end, they're barely making their money back.
One of the examples of this, and it doesn't happen often, but sometimes, you get in very early on a project. This was one of the clients, Berg's in the membership, big property guy out of Sydney, spoke about in the WhatsApp. He got in when Trump came out early in the Platinum WhatsApp, the members group that we got. And he got in, screenshot of his message was he bought Trump at $9 after seeing it mentioned in the chat group on the road to Melbourne, sold at 63, and his profit was above $120,000 in a day. It's paid for a collectorship fee for a few years. Like, wild, right? But how was he able to do it? Well, he took the risk, all right? He took the risk because he got in early. It was not well known. It was before everyone was speaking about it, and then he sold when everyone knew about it. It was like, perfect.
And this is it. People come to us, they don't even know how to use an exchange. So we set them up with that. We get someone on the phone with them. We do tutorials, everything like that, connect them with all the people that they need. And over time, you learn to the point where you can now go and see these opportunities and do those kind of things. And this is the thing, we're a subscription model, so you have to succeed, and we teach a man to fish. We don't hold all this information. It's like, no, we want to create great crypto people where you can start to do things like this in your life.
So good. So the next one, when you're making this money, is understanding your tax, right? Tax and structuring. And it's different for different jurisdictions. We've got clients from 41 different countries around the world. So it's obviously different no matter where you go. But this is really important where we actually bring on tax, partners and, specialists to kind of go through, tax efficient structures and ways to manage your tax. I think at a basic level, what I'd recommend is like signing up again for something like crypto tax calculator. I think it's now called SUM, SUMM. And you can basically start to plug in all of your assets and your wallets, and you can start to see unrealized gains, unrealized losses, and then you can start to like position your tax accordingly. It is a little bit confusing if you're doing it alone. So the other side of it is you work with a tax partner like Crypto Tax Australia or one of the US partners that we work with, because you want to get the structure right. And I think one of the best things that we've been able to do to get a little bit of a tax efficient structure is like being able to utilize a company structure as an example to invest on your balance sheet using pre-tax dollars, so you can invest 100% of the capital up front, and then you essentially pay the tax later when it comes time to it. Versus when you get the money through your salary or you're already paying tax, you then receive 60% of what you had, and now you're investing that amount of money. You're essentially losing more purchasing power, by doing it through a personal entity. Now, you've obviously got to have a company to do that, but thinking about these sorts of things where you can optimize your tax structure so you can invest more or pay less tax is such an important part.
These are the things you want to do before you need them as well, like having a will in your life and sorting out your legal stuff. So I'll give you a couple of examples here of what Adrian goes through from Crypto Tax Australia. So the classic one is just loss harvesting. So if you talk to your accountant before the end of financial year, there'll be a lot of things that have gone down 90% that are unrecoverable, and you can claim those losses and have them against your you can have that capital loss in perpetuity. Yeah. The other classic example he gives is when people say, oh, I want to hold on for 12 months because I get 50% capital gains discount. And he does a calculation because crypto is volatile.
Yep.
And let's say you need to hold on for another 4 months and the market is pumping. And he does the example of if you sell now, how much tax you pay versus if there's volatility, how much you will actually end up with. And the calculation is almost always, if you are making money and things are hot, sell.
Sell. Yep. 100%.
Yep. And this is from an accountant.
Yeah.
Because people want to maximize their gains, and it's not the way to do it.
Yep.
Another thing is a lot of people come along and they've been very lucky in their investments, or they made a lot of money very quickly, and they'll say, Adrian, can you sort this out for me? Can you put it in a trust? He's like, well, no, it's a bit late for that, buddy.
late.
There's a few things we can do, but this is something you should have done previously to minimize your tax. There's only minimal things you can do once you've actually made the trades. And then the final thing around tax is also, you alluded to structuring, Ben, and there are tax benefits to that, but there's also asset protection benefits. So it doesn't cost millions of dollars to set up a trust or a company and trust structure. It is very cheap. It's under $1,000. Like, I think the latest one I did for a trust was like $600, and it is so cheap compared to. And you can utilize this for a range of things, not just your crypto. So you need to understand your tax position. A lot of people that come to us as well, especially our pro members, this is their first investing experience. They don't even understand you have to pay tax on crypto. Like, there's so many things, so many myths we have to dispel that, yes, it is taxed. Yes, it is treated like any other commodity/asset. It's treated like shares. You need to understand these things, because if you're making money and you're selling and you're getting in and out of positions, you will owe tax at some point in time, and you will need to set money aside.
Yes. And people forget that even when you sell crypto for crypto, that's a taxable event. And then you're buying a new asset that then goes down, then you're screwed. You need to be aware of it.
Yeah, and there's even like other laws like around wash trading, those kind of things, and how it actually applies to crypto. Because it's kind of like, well, if it's a currency, it's not the same thing and it's a different thing. And how do I allocate and reconcile this? I'm selling it, but I'm also doing DCA. So a good accountant is worth their weight in gold.
100%.
You get like 10 to 20x what you pay them in return.
And just save you time as well, right? Like, just being able to have that advice. Yeah.
Can I just say, everyone out there, you're not an accountant. Unless you are, then okay, but still get someone else to do it. Like, doctors don't do their own stuff. They go to other doctors.
Yeah.
Psychologists don't do their own things.
Yeah.
You're not going to go out there. This is what my buddy said to me. He's like, you're not going to go out there and cut your own hair, are you? I'm like, well, no. Well, I might, because I shaved my head. But everyone else, you just don't do that. You go to a barber. And this is one of the things where, why do you think you can do it yourself when there are people that undergo serious training, first of all, just to become an accountant, but then keep up with crypto, read through all the different legislation stuff. Like, even Adrian's gone to court multiple times because he wants a special ruling.
Yeah.
I don't know if it was court off or it was with the ATO, whatever it was, because he's like, well, these are undefined and this is going to save this particular customer, I think it was $4 million. He's like, we should just question this and we should go. And they ended up getting a special ruling, and that's now kind of legislated. And they're like, this is what it is now. And
so good.
You think you're going to compete with those people? It's okay to look at what you've got and bounce off your accountant, but please just get an accountant.
Yeah, no, totally agree. And especially as things become more complicated. And I think, listeners listening to this are probably already, sophisticated and probably have their own tax accountant. I would just recommend seeking if they understand crypto well. That's a big part, because there's a lot of gray areas. Yeah. And I personally have a tax crypto specialist accountant, and I've got my main accountant, and they work together.
Same. So I don't want to change all my stuff with my main account that does my personal stuff, my companies, my trusts, everything like that, property, whatever. I don't want to go to another accountant. So I have Adrian, and he just prepares the reports. He talks to my accountant, sends it across, and then we do that tax return for that trust. Yeah. And it just works so well. There's strategy on both sides. They're experts on both sides. They talk well together. So don't feel it has to be all in one bucket.
Yep. Now, last but not least, the 7th step of this process is the sell strategy. Now, the sell strategy is what most people struggle with. It's difficult. I think a lot of people overcomplicate it. There's really a couple of ways to think about this. One is, what are you selling? Like, what do you want to sell? So for me, my goal is not to sell Bitcoin if I don't have to. Like, I really want to accumulate Bitcoin. I want to sell my altcoins though down to buy more Bitcoin. That's really the goal. Now, when we're looking at sell strategy, I like to look at periods of time where I am going to take percentages off of my altcoins when the market is in euphoric, multi-year highs. So what does that mean? Well, there's different ways you can look at signals for tops of markets. On-chain is a big one. You can look at fundamentals. You can look at technicals. For us, sentiment is a really big one. Like, when is the majority of the market euphoric and thinking that the top of the cycle is going to continue going on? That is usually at points where we start to take chips off the table. And I usually take out, 33% as an example, 1/3 of my positions when we're in those periods and just take them off step by step rather than trying to pick the absolute top and take everything out. Near impossible to do. It doesn't exist. It's easy in hindsight, not reality in real life. So yeah, dollar cost averaging out is a big one. Understanding what your data is to help you take profits off, and then coming back to your goal. Is your sell strategy aligned with the goal?
Spot on. And you are so good at selling. And I know when you update the platinums, you're like, hey, this is what I've done. And you're just like, the sentiment has changed, the market has changed. I'm starting to see these things. I'm taking 33%. People are like, what the hell? This thing's pumping. Are you mental? And you're like, no, this is how you succeed. And it is the hardest thing to do when things are pumping.
Yeah, totally. And
exactly right.
Yeah. And I think the other one, I was just going to say is like people, you've got to act and you got to sell in the emotion that it feels the worst time usually to do that. Do you know what I mean? Like people will sell when they're panicked and they'll buy when it's euphoric.
Yeah. You sell into strength, and then when you're buying, it must feel very, very uncomfortable, like it does now to buy.
Yeah.
It feels so uncomfortable because things are going down, and that is when you make the most money.
Yeah.
And so for my sell strategy has changed as well. I had specific targets for when I wanted to sell. But now I'm at the point where I see crypto as my long-term growth engine. I'm moving towards majority Bitcoin and starting to offload my altcoins as they hit specific targets. So I don't have a sell target for my Bitcoin. I'm accumulating Bitcoin, but I do have sell targets for those altcoins.
Yeah, which is exactly the game plan. And then you basically want to stack stable coins or cash and then rebuy back in the lows. That's kind of the overall goal.
That's exactly right. And it seems simple to have a sell strategy, but when it comes time to do it, you need a group of your peers to support you. So we get a lot of questions in the group where they're like, oh shit, this has happened. Like I've hit my thing. I'm basically getting a notification I need to do this. I don't know if I can do it. And we're pretty much like, hey, this is your plan. You don't have to execute the entire thing. Why don't you just do 10% of it? Wait a couple of days, see how you feel. You can psychologically adjust, see that it wasn't the end of the world, and then you can move another step forward. It doesn't have to be all 50 steps at once. It's just the next one. And that support and that peer kind of mentorship is so important in this journey because it is very, very difficult when it comes time to take action.
Yeah, 100%. So there are your 7 steps, folks. What does your portfolio look like now? What are you trying to get out of crypto, like your goals? What's your time horizon? How is your portfolio structured? What's your buy strategy? Have you thought about tax and structure? And then what's your sell strategy? And that's really the difference between, I think, Bergs, like the wealthy investors and people that have no plan, is that they don't try and be clever. They don't try and just guess based on influencers and people online. They don't rely on just headlines. Like they have a plan, they act logically, and they invest based off data rather than chaos. I think that's the big part.
Yeah. They're not going out listening to 10,000 different influencers and trying to, synthesize that. They go to select experts. They set up their different structures, their plan, and they spend most of their time upskilling themselves in managing their psychology and taking the action on their plan when it comes time to do so.
Yeah, bang on. Guys, hopefully you enjoyed that. You found value in that. If you want our support, you want to be coached by us, you want to see how we can actually work with you to build this out. This is what we do with our clients. We've got over 350 platinum clients now where we build out this process, work with you all year round. In-person events, weekly sessions, one-on-one sessions, WhatsApp group, access to analysts, pretty much everything to build this clear path out, and then help you manage it ongoing throughout the year to try and get you as successful as we can. If you're interested in that, we've got a link to our basic training online. You can check out how we operate, how it works. You can apply to join by booking a call, and we'd love to work with you. Got a lot of Ben and Bergs listeners that come across Bergs into the group, which is great. They're the best.
Oh, it's so good when they give us a shout out. They're like, oh, I heard the podcast. Like now with the group, it's like, it's actually legit. It's exactly like you guys say. I'm like, warms the heart, mate.
So good. So good. So thank you, folks. As always, if you like the podcast, please leave it a review. Otherwise, share it with your friends or family, anyone that you think could find value. Subscribe if you're on YouTube, and we'll see you on the next episode.
Thanks, champions.